We begin the conversation in Nigeria, where the federal government has revealed its plans to secure a new $1.5 billion loan facility from the World Bank as part of its efforts to address the fiscal gap in the 2023 budget. The Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, made this announcement during the 2023 annual meetings of the World Bank and the International Monetary Fund in Marrakech, Morocco. He also emphasized the government's commitment to coordinating between monetary and fiscal policies and promised not to breach the Ways and Means limits. Edun highlighted that Nigeria's efforts to attract investment and reform its tax system are gaining momentum, positioning the country as an attractive destination for both foreign and domestic investments. Now, joining me tonight on the conversation is Jide Akintunde, the managing editor of Financial Abuja, Nigeria, and also Ogbonna Ukuku, investment and economic development expert, joins us from the nation's capital, Abuja. A warm welcome to you, gentlemen, and thanks for joining me on the conversation.
All right, thanks for having me on the program.
Now, I'd like to start with
you.
You're welcome. I'm happy to have you both on the conversation this evening. I'd like to start with Ogbonna Ukuku in Abuja. What specific components of the 2023 budget are contributing to the fiscal gap that necessitates a $1.5 billion loan from the World Bank? Nigerians are wondering why another loan, and how will the loan funds be allocated within the budget? Is this really necessary?
Okay, let me start from the point whether it is necessary to take a loan. Of course, it is necessary because, you need to show up your income as a nation to be able to fund your budget. Because if you have a budget and then the income coming from the statutory windows are not able to meet your entire funding gap, so you need to look for other ways of getting funding, unlike the previous administration that would take advantage of means and the ways and means which actually kills the economy more. It's a lot easier for you to look outside or look elsewhere for those kind of funds, the finances that you need to fund your budget. Then again, going to the IMF or World Bank for such loans is actually better for you because you can only go for concessionary loans. These are loans with very low interest rate. These are loans that have very lenient conditions. So every nation that finds itself in this particular situation, that's exactly what they would do. Look for funding from multilateral agencies like the World Bank to be able to support them to show up, the investment gap they find in their budget, because the income that is coming from the usual means are not there. And then number three, yes, looking for a dollarized loan at this point in time will also help you as regards the FX shortage you're having. So you need more funds coming into the country, into your economy, so it can help you show up the cushion the issue of foreign exchange which you are currently having. So starting from that end, I know maybe subsequently I can answer other questions that will come up. But coming from that end, I think it's something is when you get to that point when you don't have enough resources, this is the only way to go, to find monies from elsewhere to fund your budget.
Thank you very much, Ogbonna. Jide, I'd like to pick up from where Ogbonna stopped. How did you get to this point? We're looking for more money to shore up our budget. Nigeria is one of the largest oil producers on the continent. How are we lacking FX to fund the budget? Now, Jide, could you provide insights into the economic indicators that led to the decision to secure this loan in the first place? And what impact might the fiscal gap have on Nigeria's overall economic stability?
Yeah, thank you very much. Yeah, it is true that Nigeria currently faces acute fiscal challenges relating to ability to generate revenue, especially foreign exchange revenue, to fund the budget. However, the current situation that we are talking about, at least from the information that is publicly available, this new 1.5 billion proposed loan is supposed to be channeled into funding social spending of the government so as to cushion the effect of the subsidy removal. So that is the information that one has about the direct necessity for this loan. And then the question then becomes, I mean, why do we need 1.5 billion loan to fund essentially items that would be in naira? I mean, the palliatives are not, denominated at the point of giving them out. They are not denominated in dollars. So why are you borrowing in dollars to fund this program? I would say that Nigeria indeed is in a very, very serious fiscal dire straits. And it is important that we have a very holistic approach to addressing how we would move from where we are currently to a more desirable place. Of course, one of the options that we have is to increase oil production so that if we produce more, if we're able to meet our OPEC quota, we will earn more foreign exchange, but it doesn't really look like we are able to ramp up production of oil at the rate that we need to do in the short term. And so the fiscal hole exists. And again, I would like to also say that part of your question touches on budgets. Okay, so I'm not even sure that the palliative itself that this money is going to be borrowed for is budgeted. I don't think it's in the 2023 budget. Perhaps if the loan is secured, then there might be a supplementary budget. Otherwise it will be extra budgetary spending. But like I said, I do think that we have to have a holistic approach in looking at public finance in Nigeria. What is the situation we have? Where do we want to go? How do we get to where we want to go? I remember that Mr. President himself said that during his administration, he is going to end the excessive reliance on borrowing. But the contrary is what is happening now with various loans that have been secured within this very short period of time. Last week, the DMO concluded a 650 billion Sukuk loan, and there are other facilities that have been secured.
Bank loan also.
The end of June. So I think it's important that the strategy should be very clear-cut so that actions matches strategy. So that's what I would say in the meantime.
Thank you very much, Jide Akintunde. Now back to you, Ogbonna. The Finance Minister and Coordinating Minister of the Economy, Mr. Wale Edun, did mention that the interest rate on the World Bank loan would effectively be zero. And you also said, this might be better as compared to the ways and means of the last administration, which was kind of abused. Now, Ogbonna, how does this compare to alternative sources of financing, and what potential benefits or drawbacks might this have for the Nigerian economy going to the World Bank? And also, Jide mentioned something about this loan domiciled in US dollars when majority of its use is for the the palliatives and what have you, and you really don't need US dollars for that. What might be the reasoning behind that decision?
Earlier, when the one of the reasons why that I gave, when it comes to borrowing as a nation, see, you see whether the products that you want to buy with the resources is naira denominated, it doesn't matter. The most important thing is that you're getting money, and then IMF or World Bank will not loan monies to you in naira. So if you say we should borrow in naira, that means we're going to be borrowing either through ways and means, or we're going back to to the commercial banks. And then you and I know what that means. If we start borrowing from the commercial banks, if you borrow from the commercial banks, first things first, you're going to you're going to push a lot of businesses, push a lot of people out of business, because the resources that will be needed to fund private businesses, they will rather borrow to government than to borrow to those businesses, but the risk is actually lower when you borrow to government. So it's never been, nobody ever encourages that when it comes to when you want to develop an economy. So for me, that's not even a way to go. So now, why are you borrowing from the IMF? Like I said, it's a concessionary loan, a loan with zero interest rate. So I mean, it's also going to help you bring in a lot of FX into your country. So when you bring in the FX and then you have that circulate within your economy, to also help you reduce the dollar issue we're having, because I mean dollar against naira is shooting up every day. So I mean some of this income will come. Then talking about alternative ways of funding. Now, this is short-term. It's a short-term measure. So there's going to be a long-term measure, which will also require you having the enabling environment for people to want to come and do further investments in Nigeria, especially when it comes to foreign direct investment. Now, with foreign direct investment, it comes with technology transfer. It comes with those level of funding that is required. And then it's all about you making your environment conducive. So, I mean, the government just started. They are trying to put things in place. But nevertheless, for the meantime, we're not going to wait for investors to take their investment decisions to do business in Nigeria before you start running the wheel of the economy. The economy needs to keep moving. So the only thing you have to do is to find money, and then the only way to do that is to find money from those kinds of organizations. So first you go to World Bank, you go to IMF, you go to such organizations before you now start looking for other commercial ventures who will be able to borrow you funds at a higher interest rate or with interest. But nevertheless, when you look at the interest rate out there, and interest rate in Nigeria is always easier and better for you to borrow from outside. Now, if we must grow our economy,
to interrupt you,
we must
Ogbonna.
first of all. Go ahead.
Yes,
Go ahead.
Beyond the interest rates, you've argued for the low interest rates you get from this multilateral institutions, and you've also talked about the negative effect of borrowing from Nigerian commercial banks. Beyond this, let's talk about conditionalities. Are there conditions? Does the World Bank attach strict conditions to borrowing, for example, telling you to scale down your social investment programs and subsidies, removal of subsidies, and what have you? Are there conditionalities when it comes to World Bank loans beyond the interest rates, the low interest rates?
No, I mean, those ones they come with it. They come with the loans. Fiscal discipline, you must actually adhere to strict fiscal discipline. Number two, things like subsidy. They've always been an advocate of subsidy removal in Nigeria. So that's one of the reasons why they are actually giving you the money. They know you need to help the economy, need to, provide palliative for the people because of the effect. So these are commitments they made, prior to the time, doing the advocacy for us to remove subsidy. So, I mean, so other conditions, like I said, the fiscal discipline, which they expect you to actually adhere to strict, compliance. There'll be strict compliance to the ways, the transparency to which you spend this money. So, I mean, these are normal things that come with those funds when they coming from multilateral agencies, because they also want to your monitoring and evaluation system has to be well in place, intact, so that it has to be transparent. The monies have to be tracked. You need to track the monies. So it's not like a largesse where you get monies and then you can spend it anyhow you like. No, you can't, because I mean these are things they will tell you straight up. I will not give you my money, because I mean these are monies that belong to a lot of nations. So for that monies to come to you, you must definitely adhere to strict they give you strict conditions that you must adhere to. But I mean, any which way, it's still going to be better for you to adhere to those strict conditions because they will help you. They will help you be a bit more disciplined, make sure that the monies get to the right people. I mean, they were part of, putting together the social register that we have existing in Nigeria, which is still being reevaluated. So they make sure they work with you because they provide that technical support that you also need to make sure that these monies get to the right people.
Thank you very much, Ogbonna. Now, Jide, Ogbonna did hammer on the need for foreign direct investments. Nigeria is actively working to attract investments. What specific policy changes or initiatives have contributed to Nigeria's rise as an attractive destination for foreign direct investment and domestic investments, as claimed by Mr. Wale Edun in Marrakech, Morocco? Is Nigeria looking like a viable and an attractive foreign direct investment destination?
Okay. I mean, the data suggests that Nigeria in recent years was not considered as a viable destination for foreign direct investments, because if we look at the data, there has been a systematic decline in the value of FDI that the country has attracted in the past few years. And there are quite a number of reasons for that. One of the reasons is actually, again, the fiscal condition in Nigeria, especially liquidity, foreign exchange liquidity in the market, because when investors bring in money, they want to be able to know that at the time that they would like to exit, that indeed they will be able to exit. And we have had issues with exits from even just transaction, repatriation of funds, like we have in the airline sector in Nigeria in recent years. So these are key issues. But beyond that, let's talk about the impact of debt. We know that Nigeria is usually, even by the same IMF and the World Bank that are now proposing to provide additional lending to the country, they feel that the country is overburdened by debt. They have talked quite a lot about the high cost of debt service as a ratio of government revenue in Nigeria in 2022. Over 3.3 trillion naira was expended on debt service, and this really creates a lot of issues. Now, what I would have thought actually was that the government would move very rapidly with the reform of fiscal and tax policies, since a committee on that has been inaugurated. I thought that that work would actually be seen as an emergency work, so that a holistic approach to tackling the nation's fiscal crisis, would emerge, and then we will know what we're doing. So in the time being, it just really looks like we are doing firefighting. I do sympathize with the government because there is acute problem of foreign exchange liquidity in the system, and that is why we see the decline in the value of the naira in the forex market. But borrowing, and I do think that Mr. President himself recognizes the challenges of borrowing, and that's why he said he's going to end it. It is one thing to get a loan at a concessionary rate. We have gotten several of such in the past. They have contributed to building up the debt profile of the country, whereby right now, at least as of the end of June 2023, the total debt stock was $113 billion. Out of this, about 38%, that's about $43 billion is foreign debt. Now, if we cast our mind back to the mid-2000s, when Nigeria had this type of profile, everybody agreed at that time that it was an overhang. And so we did an exit deal because we had the dollar flow, the oil windfall at that time. But the key point here is that when we were at a stage that was less than this in terms of the public debt profile, we thought that there was an emergency with the public debt in the country. But now I think that things are really quite dire. I would just suggest that we should be very, very strategic. We should be very holistic in our view of the situation, and we should be very, very determined in terms of what we want to do. $1.5 billion will come and we just fizzled. I mean, a few weeks back, there was the 3 billion from Afreximbank.
Yes.
When it came in, there was a slight movement in the foreign exchange rates, but within days, the impact of that fizzled. So you could now wonder what exactly is 1.5 billion going to do for the rest of the year, and how is the 2024 budget when it comes out, how is it going to be funded? So these are very, very key issues. So we have a problem, but I just want to be sure that the solutions are adequate. Yeah.
Okay.
So that's my.
Thank you. Yeah. Thank you very much, Jide. Now, Ogbonna, it looks like the government has a lot, especially the finance minister and the coordinating minister of the economy, on their hands, looking at the debt stock, the revenue inflow. We're not producing to optimum levels, so we're not even getting enough forex from our oil production. Now, the finance minister mentioned plans for tax reform. What specific areas of taxation, in your opinion, should be considered, and how might these reforms affect revenue generation and economic growth? It's one thing to tax people, and the ordinary Nigerian is wondering, like, they're saying we're under a cost of living crisis, and the government is looking at taxing us some more. So could you help us make sense of all of this, and why it's important to shore up our tax revenue?
Now, tax reforms for me is something that needs to happen in every economy. I say that because in other climes, when you look at other climes or climes that are doing better than us, if you watch closely, you will see that most of the time, the more you earn, that's the more you pay. But in Nigeria, it's not the same. Everybody pays almost the same thing. I pay the same tax. My company pays exactly the same tax that every big company that you can think of pays. I mean, that's totally unacceptable. So when you're working out your tax reform, there has to be a structure that would be able to absorb the level of income of people, and then be streamline how much they need to pay when it comes to tax. Then again, another thing is being able to have more people in your tax net, because if you look at our tax to GDP, is still quite low compared to other countries that are, that are favorably functioning and running their economies with incomes coming from taxation. So, tax reform, then again, the issue of double taxation, different organizations taxing different people, a truck moving from Abuja to Lagos, they pay different things on their way. So if you have a single window tax system, that will also help in the reforms, but that's also one of the things that actually impede or stop investment flow into any nation. So it's a welcome idea for us to have a tax system that works. And again, when it comes to economic development, that's something we say all the time. Unless your hand is on the plow, it will be difficult for you to be part of information, decision making. I say this because even in the Bible is there is if you don't, where a man's treasure is, that's where his heart is. Until every single Nigerian, including a housewife, starts to contribute to nation building, it will be difficult for us to participate effectively when it comes to our political process. I always try to explain this. What I'm trying to say in essence is, if their money and is our money, if you're contributing to the tax system of this nation, and then you see someone misusing something that's bought by government, you will see it as your money because out of your hard sweat, that's where that money came from. But now is that oil money, is that money coming from MPA, coming from this. So now when more people get into the tax net, you will see development will come. The nation would be this, there's going to be this how do I call it, this pressure from everyone for better governance. Everybody will be involved because everybody's sweat is in it. So having said that, I want to also go back to the issue of foreign direct investment. Investors are driven by major four major things. One is the resources that you have. Two, the kind of the market size. Three, market size is not population, please. I always like to make that clear. Population is not market size because, market size is people who have the disposable income to actually purchase or invest or, get whatever you are producing. Number three is strategic asset. If you have a strategic asset, investors want to, be interested in it. Our solid mineral sector is untapped. We are still having people who are not, is not well structured. So there is the first one, which is the greatest denominator, the efficiency in your system. That's where the tax reform comes in. That's where you find how long it takes for you to even get licenses, how long it takes for you to get your CFO to do business. Yes, I understand the fiscal measures that needs to, be streamlined. They all come under that denominator. So it can either cancel out every resources that you have, all the good that you have can be cancelled out just by that efficiency in your system. So the ease of doing business, council that have been working hard to make sure we streamline the processes of doing business. They're actually doing a good job. Nigeria is too large. So until there's a buy-in of every single person from those at the national government, those at the sub-national government to understand that every investor, what investors don't have is they don't have time. So you can imagine an investor who wants to do business in your country and you tell him to come and sit down in a governor's office to wait for CFO. For God's sake, nobody will do that. So we need to also understand something Hofstede said when it comes to investors.
Yeah, thank you, Ogbonna. We're quickly running out of time. I would like Jide to have the final say on this. And Jide, if you can, in less than a minute, I really appreciate it. I'm putting you in prophetic mood right now. In light of the economic reforms we've discussed in the program this evening, could you provide an in-depth assessment of Nigeria's economic outlook for 2024, when the last quarter taken into consideration factors such as inflation, job creation, and overall economic growth prospects? What are we looking at for the future, the nearest future?
Okay, so the subject about the Nigerian fiscal and economic outlook is an interesting one. We think that by the end of this year, growth projection itself would have actually reduced in terms of a comparison with what we had at the beginning of the year. So it really seems like the economy is stressed. All the shocks that we have had from increases in prices across consumer and productive inputs, all of that would weigh on the economy. But we must also say that the economy is a major conversation, and that is one credit that should be given the administration. It is really concerned about the economy. But what I would think is that there should be more planning. And so we would have to wait to see what the 2024 budget would look like for us to be able to tell, what exactly the direction we would have. Growth for the rest of this year is really going to be quite tepid. So by year end, perhaps GDP will be under 3%, which is really not good enough, given the population growth rate. It will mean that poverty is actually accelerating. But in 2024, one would expect that, number one, efforts to actually ramp up oil production would yield dividend.
Okay.
Efforts to recover assets that have been mismanaged or stolen under the previous administration or administrations, maybe there might be progress in that regard. But I would want, yeah, finally, before I would say that, I mean, I don't really see how going into 2024, we are going to lean very heavily in increasing taxes. The productive base to support tax increases in
It's
Nigeria in
not
terms
there.
of revenue, not there at all.
Now, thank you very much, Jide. We have to go at this point. Jide Akintunde, Managing Director of Financial Abuja, and Ogbonna Ukuku, Investment and Economic Development Expert. I do appreciate...
Sorry, Financial Nigeria. Financial Nigeria.
Financial Nigeria. Thank you so much for your time and your insights in the program. I do appreciate your contribution. Thank you.
Thank you very much.
All right, thank you. Thank you for having us.
You're watching The Conversation on News Central Television. We'll go on a quick break, and when we return, we'll discuss the latest political developments in Senegal. Do stay with us.